Well, good morning, everyone. My name is Paula White, and I am your instructor for Accounting 233. This is section 1, it looks like, for the October 2015 mod. And we're going to go over week 3. And let me get the PowerPoint up. And from the beginning. So today, we've gone over how to prepare for the lecture, how our taxes and extension, how to be successful in the course. There's a lot of people who haven't done any of this. So congratulations if you are participating and listening to the lecture, participating in the lecture. Right now I have one person who is on this morning, and I will encourage him, whenever you have a question, just speak it out. That way I don't have to go back and forth and find the chat box. Would that be okay?
Yeah, that's fine.
Okay, thank you. It's easier on this end, and it kind of makes it smoother for the listener later on. So, how to prepare for the lecture is first read the textbook and then come, because it's a lot easier to apply what I'm trying to tell you if you come with some knowledge, whether or not you understand it or not. I can fix confusion. I can't fix a blank slate. So if you come somewhat prepared, it makes it so much easier to understand. And you do have access to the publisher's PowerPoints. I suggest you flip through those. I've gone through over taxes are an extension of GAAP. I just told the person on right now my opinion on why taxes are complicated. And quite simply, my opinion is it's written by lawyers in Congress. So what do you expect? There's over 40,000 pages of federal tax code written by Congress, and it includes social engineering, which I believe is somewhat the answer to the discussion forum question for this week, talking about why deductions are limited and why some deductions exist on the itemized deductions, because they're trying to convince the American public to do certain things, except if it gets to be too expensive, then they want to encourage you by some tax deductions, but not pay the whole bill by limiting it. It includes politics, but my recommendation is read the book first, read the homework problem, apply the rules that apply, and apply the rules. So please don't throw any points away. I have some students in this class that have done one daily checkpoint. That could be the difference between passing and failing the class. So don't throw those daily checkpoints away. Most of you are participating in the discussion forums, and that's great. You're not throwing those points away, and you're encouraging further discussions. This last week I thought was quite interesting about legality of legal businesses and illegal businesses, and the taxation of it. And it feels weird that if you're in a legal business, you should go ahead and file your tax return for that business, or else you'll be convicted of tax fraud first before they get you for the illegal business. So that was an interesting discussion that we had. All accounting courses are easier if you keep up week by week. The gentleman on with me right now, he has done that. He still finds the course challenging, but he's keeping up with the course, and I believe he's doing well because of that. Don't forget about the tutors. The tutors are there to help you, and they are qualified to help you with this homework. They won't do the homework for you, but they're qualified to guide you through it. And of course, the lectures, after I record them, After I do them, they're being recorded at the moment, and then they get posted to the live sessions section. Remember that assessments cannot be reset. And week 4 is coming up next week. And the final assessment is you need to do a tax return. You have to fill out a 1040 and a Schedule A and submit that. The tutors can assist you to a point, but because it's an assessment, it's you being tested, they can't go as far as they can go when they help you with your homework. So just be aware of that. So what is this week's homework? There's 3 assignments. One assignment is an essay. And the essay is, you need to find a section of the IRS code, the Internal Revenue Code, that deals with itemized deductions. And write a 1-page report on any one of those deductions which you qualify for and how it can save you money. So this is an application of information. So if your life is in the, if you're in the stage of life that, hold on a second.
Where would we go to find the Internal Revenue Code at?
Well, I think the easiest way would be to go to Pub 17 and just look it up there. Plus, we're going to go through some of the itemized deductions for you anyway. But I think Pub 17 would be the best source for information that's applicable to the Schedule A. So I'll show you that too later on. Good question. But if you're in the stage of life that you do not own a house, or you do not have kids, or you do not give to charity, or you have very little medical, then pretend that you're 5 years down the road and you may be doing it. Choose one prospectively or one realistically, depending on your own lifestyle. So what does that mean? Here is the itemized deductions, and the total on the itemized deductions, I'm just going to have you here. The total itemized deductions is line 29, and line 29, itemized deductions from Schedule A. So this would be line 29, or if you don't have a lot of money in line 29, you take the standard deduction, which if you're single or married filing separately, it's $6,200. If you're married filing jointly or a qualifying widower, it is $12,400. So if you are married filing joint with your spouse, if your itemized deductions are $12,800, take your itemized deductions. If your itemized deductions on Schedule A total $12,000, then take the standard deduction. The bigger you can put the number in here, the better off your taxes will be, because this is your AGI, and you're going to subtract your itemized deductions from it, and then from that balance, you're going to subtract your exemptions. You, your spouse, your dependents, or the numbers of your exemptions you can take. So that's the role that itemized deductions play. So let's look at Schedule A, and I don't know if you've actually looked at one before in your own personal life, but it begins, it's a 1-page document. I just have it covering 3 slides because I wanted to make sure that you can actually see it. So let me just make sure that we are recording. So it starts with medical and dental. So this is where you would put your out-of-pocket medical or dental costs. And here it wants you to put the amount from 1040, line 38. I bet you that's going to be AGI. So let's check. Come on, let's check. 38? Yes. This is your adjusted gross income. So they want you to take your adjusted gross income from the 1040 and enter it here. Then for 2014, you multiply it by 10%. And you put that number here. So which number is greater? If your deductions are greater than 10% of your adjusted gross income, the amount that's over 10% goes into line 4. What this means is if you have $15,000 of medical out-of-pocket medical costs, and your AGI, 10% of AGI is $10,000, you can only deduct on your itemized deductions $5,000, the difference. So they limit your medical costs in the itemized deductions. They want you to take care of yourself, but they don't want to pay the whole burden. And here, taxes paid by you. You have state and local. You can either do income taxes that you paid off of your W-2 or a general sales tax. Now, there are several states that do not have income taxes. I believe Washington State is one state that has no income tax. So then you'd only be able to take general sales tax. But the state below it, Oregon, has no sales tax. They have income tax. So I think that's one reason why we do have both options here. But it's an option, one or the other, not both. And that gives you some deduction for having paid taxes locally. If you own a house, you get to take your real estate taxes off. Some states have personal property taxes, which is a tax rate on the value of that personal property. And that would be on line 7. And I'm using words specifically here. In Illinois, the tags on our car were exactly that. They were a tag on our car, our license plates. So if your car was a certain, if it was a car and not a truck, there was a schedule of fees for cars and there was a schedule fee for trucks. So that would not have been qualifying as a personal property tax. But I believe in California, it's the value of your vehicle times a rate. So it's a tax on the value. So it is a personal property tax. So it
Really?
Yeah, it depends on how the taxes are established.
Because that's what they do in Georgia.
What the value of property times the rates?
Yeah, for my vehicle, for my truck, that's what they wanted to do. They take the value and then times, I think it was 10%, and that's what you pay for your tag.
Yeah, well, that will if you can do an itemized deduction, that qualifies. If it's your personal vehicle, that qualifies as an itemized deduction.
Huh.
See, you learned something. Personal.
Cool.
Cool, isn't it? Okay, and on interest. When I first started as a CPA, we could take credit card interest off on tax returns, but that long ago has been removed. But I think that's social engineering also. They don't want you to have the government pay for your perhaps mismanaged credit card balances. But what interest can you deduct? You can deduct the home mortgage interest and points that are reported to you by your mortgage company on Form 1098. If you happen not to have a mortgage company, but your next door neighbor or the gentleman down the street gave you your mortgage, then you need to identify that person's name, social security number, and the address, and then you can take the interest off that he or she charged you. Points not reported on 1098, and there's some special rules there. Do you know what a point is by any chance?
Nope.
Nope, good. So, of course, a mortgage is a loan, and every time you make a payment, you pay a part of your principal and part of your interest.
Yes.
To get the interest rate low, sometimes the mortgage bank offers you a lower interest rate, but then they say, but it's 1.5. What that means is they'll charge you 1.5% of your loan balance as prepaid interest, and that has to be paid to them at closing. So to get the loan, you're prepaying 1.5% of interest up front to get that lower rate throughout the 40 years. Does that paint a good picture?
Yes.
So when you see some ads on the television or in the newspaper, 1.5 points, 2 points, 0.5 point, and then they're having really low rates, that's what they're doing. They're getting their money up front through interest, but they're calling them points and confusing the issue. That's what it is.
Huh.
But because it's prepaid interest, it is tax deductible because it's based on your home mortgage. And then you can have mortgage insurance premiums put in here. Investment interest. You have to file another form to your tax return, but if you take a loan out and the loan interest, let's say, might be 3%, and you take the money that you borrow at 3% and you put it into a financial instrument that earns you 5%, why not do it? You're making 2% on money without having any negative impact, because the 5% will come to you as taxable income, but the 3% you're paying on the loan to get you to acquire that financial instrument is a tax deduction here in your Schedule A itemized deductions. So this is the interest on the loan that you took out in order to purchase into an investment, which gets you interest or dividend income. So that's something that's there. Charity, you can give cash or checks to charity. If you make greater than $250 gifts, you have to do some other form, but still you still get to take it off. There are some limitations to it in the higher ends. But have you ever given to the Humane Society or to Goodwill or any of those, when you're cleaning out the garage or cleaning out the house, you just give stuff away?
Yeah.
Yeah? Well, that would be gifts other than check or cash. And if you do more than $500 of worth, you have to fill out a form that tells the IRS how you valued it. If you had some shirts in your closet that you no longer want to wear, are you going to value it at garage sale prices, maybe 50 cents or $1 a shirt, which is its value? Or are you going to say, well, I paid $20 for each shirt, and that's retail, and you do it retail? Well, the IRS doesn't buy that. if you have shirts hanging in your closet for 5 years, that they're still worth $20 a shirt or 30 or 40. They'll buy that they're worth 5, 6, 1, 50 cents a shirt. So they want to know what you gave and the value of what you gave. Okay, so, and there's a carryover if you can, there's a limitation on what you can take. And you can carry that over year after year. So now we have casualty and theft losses. If you had someone steal your car and you didn't have insurance on it, they stole the car, you went through all the police reports, you did everything you could, you can take that theft loss off on your tax return. Or even if you did have insurance and they only compensated you for a third of the value of the car that they took, that they stole, then the amount that you're out, your loss, you can take here too. And what's a casualty loss? Do you have any idea what a casualty loss would be?
Never heard of it before.
Well, you've heard of casualties, you just haven't thought through it. What happened with Katrina? What about the fires in California, the mudslides? The Mississippi River having its 100-year flood. Those are casualty losses. So when I was in St. Louis, we had the 100-year flood, and the river was coming out of its banks, and there was an entire community of businesses and houses that, because the dam burst, they were totally flooded. And people lost their businesses, they lost their business assets, they lost their homes. Those would be casualty losses. So when you hear things on the news and see bad things in the news, that's also a tax deduction for those people who are going through the crisis of bad weather situations. So the next thing is job expenses and certain miscellaneous deductions. This is, no matter what we put in line 21 through line 25, 21 through 24, it will be limited by the amount that this total on line 24, how much this total is greater than 2% of your AGI. Because here they want your AGI to be put in here, your adjusted gross income, and 2% of it's here, and they want you to put the difference here. So a lot of times people cannot make up enough stuff in here to qualify for an amount on line 27, because if you have tax prep fees, $250, and an investment, safe deposit box, etc. So what's your safe deposit box cost? $50 a year? No matter what, $300 will not be greater than 2% of your AGI. So you're pretty much limited. But where I have seen this is unreimbursed business expenses. I had my practice in a union town, a steel town, and those folks who worked at the steel mill, they had to have steel-toed shoes, they had to have uniforms, they had to have protective gear. All that type of stuff that they had to buy, the company did not reimburse them for, so they were able to take their union dues, because they were union. They were able to take your union dues and unreimbursed business expenses, and they qualified for it because of all the required, for OSHA. OSHA required all of the safety gear, and they had to pay for that themselves. So I have had some people get a pretty substantial amount in line 27 because of specialized um, uniforms, job travel, union dues that were not reimbursed by the employee expense. This also includes uniforms. But if your uniform is to wear a suit to work, and if that uniform is socially acceptable to be worn publicly, then it's not an reimbursed employee expense. Because, gentlemen, you're expected sometimes to show up in a suit to occasions not related to your work. So having a suit would not be a uniform, even though it may feel like one. Tax prep fees, okay, so continue on. And other miscellaneous, you have to list them and document them in line 28. Now, is your AGI greater than 152,000? If it's not, then you just sum up all the totals in the right column, and that's your itemized deductions. If you do make more than 152,000, you have to do another worksheet to figure out how much of your deductions you can take, because the topic for this week's discussion forum is on limiting why Congress has limited some of your deductions. And here's another example of a limitation on a deduction. They limit some of the deductions within the Schedule A. You just saw one right here with this 2% over AGI. You saw it with medical, anything over 10% of AGI. So they limit some of the items here. In addition, they limit it based on making over a certain level of income of AGI. So if you make over this particular amount, 152,525, you may have to reduce this amount. And I've had some clients have it reduced down to 0. They couldn't even take it because they had a huge distribution from the partnership that was their employer. I mean, we're talking $500,000 incomes, so they can't even take any of the itemized deductions. But that's not the normal situation. Normal situation is people usually make less than $152,000 that I've seen. So these are all what I just went through. I went through for a couple purposes, so you'd be aware. So you'd also be able to find something that may fit with this assignment about finding a deduction that would work for you, and write a one-page report on which you qualify for and how it can save you money. So hopefully everyone listening here and a gentleman on with me found something that may be of interest to them on the itemized deductions. Plus it will help prepare you for next week when you have to fill out a Schedule A itemized deductions and a Form 1040 individual tax return. So I'm going to check how we are on time, because we have 2 problems in addition to this. Oh, we're doing well. So we have 2 problems. I talked about becoming an enrolled agent last week. If you do like this class at all, consider this as a career goal and look into being an enrolled agent. So this is similar to problem number 7-37, which is one of your homework. It's so similar, you'll probably read the same paragraph, but the numbers are different. So Dan, your client, lives in Duncan, a small town in Arizona. Let me have a drink of coffee. Because of a rare blood disease, he has to take special medical treatments once a month. The closest place to these treatments are Phoenix, which is 180 miles away. The treatments are provided on an outpatient basis but require him to stay overnight in Phoenix. During the year, he makes 12 trips because he needs them monthly. He makes 12 trips by automobile to receive these treatments. The motel he always stays in charges $90 a night. And for the year, Dan spends a total of $250 for meals on these trips. $150 of this $250 is spent while en route, going to and from Phoenix from his hometown, Duncan. So what is the amount of his qualified medical expenses for 2012? Now, this would be a situation where you would go to the textbook or to Pub 17, which I'll show you a little bit later on today, and read up on the section of medical, and then apply what you read. So the answer for this version of 7-37 is he gets mileage, he gets lodging, and he has some meals en route. And the total of those would be the deductible for medical that would be subjected to the limitation, but this is what he's able to get together for his trips. So he had 12 trips because they're monthly, 180 miles one way, so it would be a round trip, 180 miles times 2, so he drives 360 miles each time he goes to the doctor for his treatment. And in the text, the rate for mileage for medical is 19 cents. In 2015, the year we're in now, the rate is 23 cents, and I think for business it's 55 cents. So they don't give you the whole amount for medical. Excuse me. So for mileage, 12 times 180 times 2 times 19 cents is $821 for mileage. Excuse me. For lodging, he has 12 trips. He can only take $50 because it's limited. If you have a $40 hotel, then you can take 12 times 40. If you have a $180 a night hotel, you can still only take $50 off your taxes for lodging. So 12 times 50 is 600. The meals en route were given to you at 150, and they are 50% deductible. So 150, half of 150 is 75. And then you add up these three numbers and you get $14.96. Okay, are there any questions here?
Nope.
Okay. So if you follow this format, you'll be in good shape for the homework, just like last week. Okay, similar to 7-50, which is your second problem. Okay, you have, sometimes when you get these paragraphs, read the last sentence first. The reason I say that, it tells you what your goal is. Because just glancing through here, there's a date, there's numbers, there's a listing. Oh my gosh, this is really confusing. But if you look at the last sentence, it says, what is the amount of Doug's taxable income? Now you know what you have to do. You have to figure out taxable income. So with that, you can read the descriptions and the details, and it might be easier to solve if you now know what you're trying to do. Because sometimes when I read these type of problems and I go through them, I'm going, oh, he's got $2,500 in state income taxes, and my mind goes into that direction. And then by the time I read the whole paragraph, I'm totally confused as to what my goal is. And then they say, oh, by the way, what's taxable income? So if you read the goal first, then you can be more successful. Just my little hint. So Doug incurs the following deductible expenses. And they told you they're deductible. So $2,500 in state taxes, $3,300 in local property taxes, $950 in medical, $2,200 in charitable contributions. He's single, no dependents, and has a $35,000 AGI for the year. It tells you to use $3,700 for one personal exemption because he has no dependents and he's single, so he only has one exemption. So what is the taxable income? Well, to do AGI, you start with AGI, which is $35,000, and then you figure out his itemized deductions to come down to total itemized deductions, and then you have your personal exemption, and then you have taxable income. And I'll come back to that part. I just want to show it to you on the form so it doesn't feel foreign to you. This is page 2 of your 1040. 1040? Okay. This is page 2 of your 1040. So you begin with AGI, adjusted gross income, from the bottom of the previous page. And then you have your itemized deductions or standard deduction. And they're trying to lead you here to do an itemized deduction. And then you subtract your itemized deductions from AGI. And then line 42 are your exemptions, which is the $3,700 that they gave you times the number of exemptions that we can take. And then that gets you to taxable income. So it's this equation from line 38 to 43 that they're trying to get you to calculate with this paragraph. Okay, so here we have AGI, and then we have itemized deductions, personal exemption, comes down to taxable income. So itemized deductions, we were given $950 for medical, 7.5% or 10% of AGI. 10% would be $3,500. Regardless, the answer becomes the same. None of his medical can be deducted because it's zero. He couldn't take, when he can take $1 would be when his medical is $2,626. Then he can have $1 count toward his itemized deductions. Until he has out of pocket of $2,625 spent, there's no medical deductions for him. State tax, $2,500, that was given to you. Property tax, $3,300, that was given to you. Charitable contributions, $2,200, that was given to you. The sum of these four numbers is $8,000, less the personal exemption of $3,700. So $35,000 minus 8 minus $3,700 will get you $23,300. So my suggestion is to kind of stay with a format similar to this, because I am one who's looking for reasons to give students points. I have some students that just give me the answer. So if this was a problem and someone gave me 21,000, I don't have any basis to give them any partial credit. But if they show me that they went through all this and they just misadded, then I'll give them partial credit, only if they give me their detail of how they calculated it. So help me help you by showing me your calculations. Does that make sense?
Yes.
Yes, okay. So when you're in the industry of doing taxes, we actually do have software we use, and the software can go from $700 a year to tens of thousands of dollars a year. The one I use is Drake software, and it can do unlimited number of 1040s, the personal income tax, fiduciary income tax, partnership, corporations, both S and C. It does the whole package. So if you're interested, you can contact Drake Software, D-R-A-K-E, and have them send you out a free demo disc. And you can kind of play with what the software feels like if you have any inkling of being interested in taxes as a career. So we're not saying thank you yet because we still have some time, and I think it's going to be a great thing because we have a question that was asked by the gentleman with me, and I said I'll show you the Pub 17 at the end. So he's been waiting patiently. So I'm going to go to irs.gov. And I'm going to just type in PUB for publication 17. They have a lot of publications, and you can nose around here just by going up to forms and pubs. Let's go there first. Current, accessible forms, browser friendly. These are forms, and these are forms. But then the question will probably be, well, how do I know which one? You just nose around enough and you find out what their numbers are. I just clicked on that, which is find forms and pubs. And if it begins with forms, that's the actual form. If it's instructions, it's the instructions to that form. So we have publication 1, which is your rights as a taxpayer. Publication 3 is Armed Forces Tax Guide. Publication 5 is your appeal rights, and it continues on and on and on. As you can see, it goes page 1 through 10 and probably continues on after that. But here is Pub 17, which is called Your Federal Income Tax for Individuals. So I'm going to click on that. And it's downloading. Okay, looks like it's ready. If only it opens. There we go. And when I open it, I just downloaded it and clicked on to open it. It has bookmarks, so you can kind of figure out where you are. But let's just page through some of this. Here's the table of contents. If I make it bigger, it's going to be smaller, which is a weird thing. See? Because this is over there. So we have part 1, which is income tax return, filing information, filing status. We did that in week 1, was filing status. We did personal exemptions and dependents in week 1. In, I believe it was week 2, we did wages, salaries, and others, and tip income is part of that, interest income, dividends, gains and losses. Then we have adjustments. And we've been talking today on standard deduction and itemized deduction. So you have the standard. If you want to know more about medical or taxes, or which one would you be interested in looking at, Terry, for your paper?
Miscellaneous deductions.
Okay, so let's check out miscellaneous. And I'm going to make this a little bit smaller because the page goes away. So what's new? The standard mileage rate 2014 is 50 cents a mile. You have unreimbursed employee expenses. So let's make that bigger. So you can read as well as I can, but you can deduct on Schedule A, line 21, unreimbursed employee expenses that you paid or incurred during your tax year. And it's for carrying on your trade or business of being an employee. And it's ordinary and necessary. Examples include a business bad debt of an employee, education that's work-related, legal fees related to your job, licenses and regulatory fees. What if you're a licensed CPA and you're working for a CPA firm that doesn't support your licensure? Well, that would be a tax deduction for you. Malpractice insurance expenses, occupational taxes, passport for traveling, subscriptions to professional journals, travel, transportation, entertainment, gifts related to your work. And there's a special chapter just for that. How about business liability insurance? What happens if you, a lot of times people, okay, let's continue on. Go from the top. Damages of breach of employment contract. If your employer says you have to have a computer, then you should be able to, and you had to buy your own computer, you should be able to depreciate it. So you can depreciate it in this section. Dues to Chamber of Commerce and professional societies. You can deduct them if membership helps you carry out the duties of your job. Boards of trade, business league, professional service organizations, real estate board, trade associations. But if it's lobbying or political activism, those are not usually deductible. If you have a specific one, you need to look it up in the dues used for lobbying section for other non-deductible expenses. Educator, if you are a school teacher, usually this is elementary school, you conduct, because you take so much into the classroom, like learning materials, construction paper, whatever, you can adjust your AGI up to $250 because it's ordinary and necessary educator expenses that were over that amount. You can deduct the excess as a miscellaneous itemized deduction. So you have to put the first $250, but over that you can put into your AGI, into your Schedule A. Home office. Home office is always interesting because it had a lot of people have. Where is it? How did I lose it? Okay, I'll talk and find it at the same time. I have a friend who is a district manager of a retail franchise, and she has to travel across 4 states. And when she gets home, she has to do some reports from her home office. And her employer said that she has to have an office at home for her to work from. So she gets to take off the amount of depreciation of that use of that space, of a percentage of her utilities. And if she rents, it's a percent of her rent expense. Let's see, where are we? Miscellaneous deductions. Educator, home office. Job search. You can deduct certain expenses you have incurred looking for a new job in your present occupation if you do not get a new job. You cannot deduct these expenses. If you're looking for a new job in a new occupation, or there was a substantial break between the end of your last job and you're looking for the new job, or if you were looking for a job for the first time. If either of those three are true statements, then you can't do job search expenses. But if one of these are, if all of these are not true for you, you can deduct your job search expenses, which can get huge. So it just continues. Employment and outplacement agency fees, travel and transportation expenses that aren't reimbursed by your business, license and regulatory fees, occupational taxes, repayment of income aid payment. How about research expenses of a college professor, tools used in your work, union dues? So it goes on and on and on. Work clothes and uniforms. This is what I was talking about with the clients from the steel mill. Protective clothing, military uniforms, and there's your tax prep fees. And it just keeps going. It seems like forever. And other expenses. Appraisals, hobby expenses are not deductible regardless. So it just continues. On and on and on. Gambling losses. If you happen to be a gambler, you must report the full amount of your gambling winnings for the year on line 21 of the 1040, and you can deduct your gambling losses for the year on Schedule A. You cannot deduct gambling losses that are more than your winnings. So if you happen to win big, let's say $10,000, but you gambled $25,000 throughout the year, you can't net a $15,000 loss. You'll only break even. 10,000 income on 1040 minus your maximum cap of 10,000 because of your earnings level. I've had some people have great losses and only were able to offset only the amount for the winnings. And that was a hard message to give. So does this make sense? Does this make you a little interested in going through? I wouldn't just sit down and read 288 pages of this document. What I would do is go to, just for your future too, go through the table of contents and see what areas you want to focus on. Is your question something in the income area? Then go there. If you want to sell your house and you want to figure out some of the information that would be tax impacting, then go to this section and start reading. It looks intimidating. Let's go to medical. It looks intimidating, but when you start reading it, it's not that intimidating. You can include only the medical and dental expenses you paid this year. That's English. That's not an intimidating writing, regardless of when the services were provided. If you pay medical expenses by check, the day you mail or deliver the check generally is a date of payment. So it's spoken in English. It just looks intimidating because it's coming from the IRS and it has all this information in 3 columns. So how are you, sir? Are you good?
Yeah. So we just got to find one of those little sections and talk about it.
Yeah, that would be somewhat applicable to you, your life. If you happen to, if some of those miscellaneous ones fit, talk about that. It's a 1-page essay on how you can possibly benefit from this deduction. It could be medical, it could be taxes, it could be interest, contributions, anything in this area. anything in this area because we're dealing with the itemized deduction. So anything in Part 5, find something that's of interest. Car expenses and other employee business expenses. Tax benefit for work-related education. Any of that. One thing, look at that one thing and apply it to how you could benefit from it. That's it.
Okay, cool.
Is it intimidating now?
No.
No. And it's Pub 17.
Okay, cool.
Okay.
Now I know where to go.
Well, I want to thank you for talking to me earlier, and thank you also for being on the line, because talking to yourself gets kind of crazy for an hour. So it's nice to have someone there to bounce off of. So thank you for that.
No problem.
And if you have questions, just contact me throughout the week, and I'll try to get to you as soon as possible. And until then, I'll see you next week, sir.
All right, no problem. See ya.
Okay, bye-bye.
Bye.